All right. What's up, everybody? RPM with you. Trader Spotlight Live, DayTraderRockStar.com. And let's see here. It is right here at 9 o'clock Eastern Standard Time, November 10th, 2011. And we are going to feature Chris Hall tonight. And I just talked to him just a second ago on Skype. As soon as I get done here, just getting things set up and saying hello to everyone in the Day Trading Radio chat room. We'll get him on Skype and get started with the options show tonight. And again, if you guys don't know Chris Hall, we had an Ultimate Trader Showdown today. And he defeated Carmine Lucarelli. And so that was pretty cool on the Ultimate Trader Showdown. But his expertise is really options. And also, he's a programmer by trade, and he's done a lot of work for us at Day Trading Radio on the website and stuff. So, turned out to be a pretty good friend of mine, and it's been a while since we've had him on, so we want to welcome him back. I see we've got Eagle, Carbon, Sunny, D Sharp, Shogun, MJ. Hey, what's up, MJ? And some of the regulars in the chat room tonight, and I see there's some new members in there too. So it's great to see you guys. And I hope I don't let you down. And we get started with a spotlight right now. And I'm going to give Chris a call as soon as I get the Skype loaded here. And again, what we're going to try to do is pretty much feature just him for the first 45 minutes to an hour. Let's get some things he wants to cover. And then what we're going to do is take questions and stuff. So let's get him on the line here. Hey, what's up, man?
And how much? We live?
I think we are.
All right. So
welcome.
we need to get Team Viewer up, don't we?
Yes, we do. Well, yes, we do.
All right. Let me. All right. You do your thing, and I'll get this going.
Quick question there. I'm a kind of a techie guy. I got Klaus in the room there asking, can I recommend a good multi-monitors taskbar for Windows 7? Ultramon at Real-Time Soft. Just search for Ultramon. That's what I use. And you can, this is actually this screen right here. You can see this is a taskbar down here. That's actually, this is one of my secondary monitors. So now I'm going to put it on auto hide so it gets out of the way for us. And so, hey, what's up, Chris? It's been a while, man. Since we've done Spotlight.
Yeah. I've been kind of busy with my full-time work because I work as a computer programmer. So I've been kind of busy. To be honest with you guys, I really haven't been in the markets that much because I've been so busy. And I apologize for it, but I'm getting back into it. So everything should be good to go.
Yeah, it's probably recently, man. It's been market's been kind of toppy and weird and news driven and everything, and maybe a good thing for you, because so many people have been
good thing. A checkbook.
so many people frustrated, And hey, what's up, Sackman? So hopefully the audio is good for everybody. Does it sound okay? And Chris, is Chris's volume okay? My volume okay? Just want to make sure before we get started here.
Yeah, I can adjust my volume. If you guys need for me to adjust my mic, I can go ahead and do it.
Yeah, I can do it here too and balance this out if I need to. And,
okay, cool.
Yeah, I think we're about right. I think so. All right. Well, let's. If you want to, can you go ahead and, if you don't mind, either in Skype or whatever, just hit me. I believe I got you. I need your Team Viewer IDs, and we'll do it in presentation mode, so I can't move your mouse around and stuff.
Remote. Okay, so you want me to go presentation? I click on presentation.
Yep. You give me your ID and your passcode. You send it to me. Send it to me in the. I might already have it. Yeah, we can do that. Yeah, that's where you at? Where are you at?
Yeah. Actually, to be honest with you guys, I just recently bought a Mac about a month or two ago.
I mean, that's my number, Chris.
Oh, is it?
Uh huh.
What do I do?
Yours on the left.
Oh, yeah. See, there we go. Yeah, see, I'm still trying to get used to this thing because I was working on Linux for so many years, and Thinkorswim runs in Java. So
Yep.
yeah, I just switched over to a Mac here recently, and I love it. As far as trading and everything, it's great. I mean, I got a backup computer when I'm trading, a little tiny Windows netbook, just in case my Linux or my Mac, or now I'm using the Mac. In case it goes down, at least I got a second computer. If I'm day trading or something, or trading the futures, I can get in and out.
Mm-hmm. Hey,
So,
it says
you
that
need a password?
the presentation says it doesn't support presentation mode for that version. So if you want to just do remote control, we can do that. This is probably the same ID, right?
Yeah, let's see, remote control.
Yeah, it's asking for the for the password.
Board. All right. So try. All right, I'm doing remote control.
Okay. So just hit me the password in the Skype there.
Mm-hmm. All right, there we go.
All right, get you pulled up here. You got a nice, pretty strong internet connection there usually. So, it says authentication failed.
Really?
Yeah. Let me try it again.
Hmm.
You know what? I may have typed it in wrong.
This
one is a difficult, thing.
There we go.
Yeah. There we go.
All right. So, what screener do you see?
I'm looking at the one where you've got the Thinkorswim up there. It looks like Thinkorswim going on.
Okay. Because remember in my Linux, I used to, because I got a couple monitors. Remember in Linux when I was working, I used to have to disconnect it and only use the laptop.
Yeah.
All right. Cool. So everything's good to go.
Yeah. We'll just concentrate on this screen.
Yeah.
And what I'm going to do here is adjust the quality to optimize quality.
All righty.
And then I'm going to zoom in.
There we go.
And when it's time to really zoom in really tight, just tell me, what area you want to point to, and I can even zoom in more, and do that.
Mm-hmm. All right. I'm actually... All right, there we go. All right, so we're good to go. Quality good?
I can, like I've had to tell so many people before, my biggest problem here is I only got about a megabit going out on my internet. So,
you do?
Yeah, yours is coming in. It looks really good. Mine going out is going to be a little bit left to be desired, but. If people, you can always full screen your browsers if you guys want to do that. We can zoom in when we need to as well.
And can you capture a little bit up above a little bit more? Because right now I'm looking at the SPX and you really can't see what I'm looking at in the top left corner. People are looking at it.
All right, so top left corner of Thinkorswim.
Yeah.
How's that? We'll do like that, just like that. And I'll move it around and kind of chase you around. We'll see if that's a little better. I'm looking at it coming back here too.
All right, and I've got the website on mute, so
yep.
Yeah, I mean, don't worry about showing my account information or anything. I mean, there we go.
You can hide that. You know that?
Guys, yeah, well, it's already hidden, but to be honest with you, I'm on Paper Money account with Thinkorswim. For this education. So anything that is here is not in my live account with Thinkorswim. So everything's paper here.
All right.
For tonight.
So cool, man. Let's get started. So you got a list of things you wanted to talk about, and of course, I guess we're going to try to stick to options, right?
Yeah, we can stick with options, but we can go with options for a little while. If someone wants to switch over and we want to talk about futures trading, we can do that. I am fine with that. Whatever the viewers, whatever you guys want to know.
Well, I tell you what we've been getting. We've been getting a lot of people asking, since we talked about the show we were going to do tonight. I got a lot of private messages and people asking, they want to see more of your like custom indicators and stuff that you've written specifically for Thinkorswim, because there's been a lot of people, and there are a lot of people that like Thinkorswim and they use it. So it's a popular platform, man.
Yeah, this is my paper trading account. I don't know if I have got my pivot point moving average system on here, and I don't know. Yeah, I've got an old one on here, so yeah, I need to. I'm sorry, but I need to. I got that on my live account that I trade with. We can do that another time where I can actually show you my custom indicators. I know we've done that before.
Well, what we could do is you could pull that up, and I could move it off the screen and stuff, and just make sure we're not, disposing any of your account numbers or anything. Maybe.
I mean, if you want me to log off and I can go into my live account and show you my custom indicators, we can try and do that.
You know how to hide your totals and hide all that stuff like you have at the top there, right on your live account too, right?
Yeah.
You want to just do that and flip over, and I'll move it back to the ES. I'll move my chart back to the ES.
Let's try this.
I'm on the ES now.
Let's go over here.
I'm on my chart now.
Oh, okay. I'm getting ready to bring up live account now.
I got my eyes closed. Actually, I'm looking at the chat room over here.
Actually, did it come up? Maybe I need to close out. Let's see.
That's another cool thing about Thinkorswim. Is it runs on Java, and since it runs on Java, it works on the Mac, it runs on a Linux system, it runs on Windows, it runs on pretty much anything that will run Java, which makes it cross-platform compatible, and I imagine for the most part it's easier for them to maintain it.
Yeah.
You let me know when you're ready for me to broadcast your screen again, and I'll drag that thing back over there.
All right, let me try and get my custom indicator up here. PP.
Michael Freeman, what do you mean I'm wrong? Wrong about what? I've said about 30 or 40 things tonight. Which one am I wrong on all of those, Michael Freeman? Tiger blood. I don't know what Michael Freeman's talking about.
All right. Okay, so I've got my account here. Now
I can't see anything on it. It's all asterisks and blacked out, right? We good?
Yeah, we're good to go.
All right. I'll go ahead and what part of the screen you want to focus on? I want to let you go, man. Just let you had a list of stuff you want to talk about. Let's do it. This is your show tonight, buddy. Yeah, it doesn't even say how much you have. No, how much money you have.
No.
Unless that $14.16 has something. No, wait a minute. I'm looking at mine. Yeah, I have a TOS account too, but it's just a little bit in there, and I just use it for quote tracker feeds and stuff.
Yeah. All right. Now, can you guys see the difference in the colors here from like a teal color or do I need to change it to a yellow?
No, we can see that, and I can zoom in on it.
Change this color. I mean, I can change this color around to be like yellow if you guys really need it.
Okay.
To be yellow. We can change this.
Probably either white or yellow and red, or I could.
Yellow,
I could actually see it. Yeah, the colors are fine. I thought so. And I can zoom in too as well. Now this is your pivot point moving average custom indicator, right? And,
yeah, there we go.
And you
is
don't,
that a little bit better?
Yeah, and you don't mind sharing this with people either, do you? We could actually this script.
I don't care.
Okay, we'll share it with.
I mean, I'll even give you the logic to it. I don't care.
Well, so why don't we do this though? Why don't we only give this to the Day Trading Radio members? Well, let's do that. So it'll be available, in a link in the chat room or something for people, for members. If got to hold a little something back for Day Trading Radio Premium members.
Yeah. So, alrighty. Now, can you see the red and yellow? Can you guys see that pretty accurate?
Yeah, I think that's pretty good. And that's the moving average looking band that's actually changing color.
Mm-hmm.
And I've got Sackman in the room there asking me how would he email me. I guess you're asking for my email address, and you can just get that from using the bot and type RPM in the room, and all my contact information is right there.
Mm-hmm.
What was it? Was a Cugs? What he says? I'm RPM selling it. No, actually, I'm just not going to give it away this time. You guys are already members, and we're going to take care of you. How's that sound? Chris, how long have you been using Thinkorswim?
Oh, I don't know, years. Way before they went to TD Ameritrade.
Mm-hmm. That's been, what, about a year and a half or so?
Yeah, and I've used them way before then. I was using MB Trading, and yeah, to be honest with you, I really don't know how long I've been using them.
Long time.
To be honest with you, yeah. Now, mainly, we're looking at the SPX, and this is how I mainly trade. Is I use pivot points. Now, pivot points, you take if we zoom in, a pivot point is just basically taking. Let's look at this candle here. So if we look at this candle right here, a pivot point is you're taking your high, which is right here, your low, and your close. You take those 3 points and you divide it by 3, and that is a pivot point. Okay? And I am a pivot point trader. And this right here, these lines right here, this right here is a whole month, okay, for October. And you have the low, your support, and you have your pivot, and then you have your resistance. Now, I'm using John Person's pivot points, okay? So there's many different levels of pivot points. Okay, there's other, like your support 1, your support 2, your support 3. But once I started doing that, I really started getting confused because there was like 6 lines on there, and I was like, all right, this is getting way too crazy. So now I just use John Person's pivots. Now, I read John Person's book, and I used his what's called PPS system, which is proprietary for Thinkorswim. And after reading his book and understanding pivot points, and I learned a lot from John at Day Trading Radio about pivot points, I was like, okay, if I really want to understand how pivot point traders really trade, I need to really fully understand this. And John Person uses PPS, which is a pivot point moving average system combined with other logic involved. So I read his book about a handful of times, and I started going through and messing around, and it took me probably 6 months to come up with my own line right here that turns colors. And this line right here is a pivot point moving average system. Okay, I don't use the 20 period, the 50 period, or 200 period exponential moving averages. I use a pivot point moving average, which are these lines, which I am taking a high, a low, and a close divided by 3, but also I'm taking the other calculations in the past to try to get a support for a pivot point moving average system. So when this line right here turns red, I want to go long. So if it's above the pivot point moving average, then I know I'm in the right direction of the trade. And that's basically how I trade now. And also, I need to look at the stochastics. And that's one thing I learned from John is definitely look at your stochastics. Okay, right here, the pivot point moving average is sloping downward, but we closed above it. I would be looking to get into a trade. Now the stochastics is starting to run back up. Now we closed above it. What you could do is get in since you're trading above the pivot point moving average. It has not changed colors yet, but you could start scaling in. So where would your stop be? Your stop would be down here at the previous low, about a couple points or percentages or ticks below the previous low. So you can start scaling in. Now that you close above it, you can go ahead and add to the position and try to ride it up
now, this
as much as you can.
This happens to be a daily chart, right?
Yeah, this happens to be a daily chart. Let's switch over to.
But this will work really on any. I mean, it works on
any time frame. Any time frame. The pivot point moving average system works on any time frame. We go to a 3,200 tick chart, and let's see. Let's get rid of the open interest. Let's go ahead and pivot point. Let's go ahead and add this back in. All right. So, okay. So right here, the pivot point moving average system. And also I've got another indicators that I was trading off today with the futures. Okay. This is a 3,200 tick chart. This works on any time frame. So, like right here, we had a pullback. We started pulling back. We had the stochastics was oversold, and we're around 1230. Once you closed above the pivot point moving average system right here, you closed above it, you can start scaling into the trade, maybe one contract on ES. Where would your stop be? Down here, a tick below or 2 ticks below. Okay, now if you want to get in here and your stop is way down here and that's too much money for you to lose on one contract, then walk away from the trade. It doesn't matter if you have a buy trigger or whatever. If your stop is greater than what you are comfortable with losing, do not take the trade. So we can go ahead and get in here. Now we've actually got a buy trigger here that I calculated in. So we got a buy trigger. Now it started changing colors. So we can start adding to the position here and start riding it up. And you would start scaling out right here. Once it started pulling back here, you would start scaling out and move to a break-even trade. And then, as you can see, we're still riding above the pivot point moving average system. Once you close below the pivot point moving average system, you need to start thinking, okay, I need to get out.
Yeah, and this is a lagging indicator somewhat.
Yes,
and you can see right after that it was smart enough to know that it's going to change. Now, those little arrows you have there, are those also getting generated and put on there for you?
Yes.
Okay.
Yes. Yeah, those are just buy and sell triggers. Those,
right.
And I got an alert system where bells, like I might be working and a bell might ring and a window will pop open and say ES long on 3,200 tick, and that way I can look at it and be like, oh, okay, it just went off, so I need to jump in, and I can try to capture some profits. And this works on any time frame. You can work it on a 2-day. You can work it on a 5-minute chart.
Right.
As you can see right here, we got a buy trigger. Buy trigger formed. We had a buy trigger at
we just popped, man. We just popped pretty hard.
Yeah, 21.20. So 21.28. So just now.
Yeah. Now, when that trigger actually went off, what would have been a realistic price that you may have captured that?
As soon as this opens up, it's not going to trigger right here. As soon as that 5-minute candle, as soon as it opens up at 9:25, the bell would have gone off, and that window would have popped open, and you could have said, okay, do I want to take the trade? You could have jumped right in.
At 12:38.50 maybe? 12:30.
12:38.75. You might have jumped in at 12:39 and tried to get filled.
Yeah,
12:39.
Should have been able to pull the point out.
12:40. Yeah, you could have pulled a point out of it. So you jump in maybe 1 or 2 contracts. You jump in 2 contracts. You get a point. You take your profit. You move your other contract to a break even and try to ride it up. As you can see, the pivot point moving average system is still in an uptrend. But we're actually going away from the pivot point moving average system here. So we will probably have a slight pullback to right here. And you could start scaling in.
Yeah.
And your stop would be down here.
Right.
That's how I trade DEOs.
Yeah. If you guys are just joining us, obviously we're doing a Trader Spotlight Live. I'm RPM, and we've got Chris Hall on here with us, and of course DayTraderRadio.com. It's about 9:30 on. If you're watching this on an archive, it's November 10th, 2011, and these things will probably be played back for years and years to come. So I always try to tell people what the date is and all. And I just had a question from Seven, and he was just asking, could drop him the information about the webinar, and I was kind of confused. Maybe he was thinking that this was a playback, but this is definitely a live show. And then he was asking specifically for some of the information, for the pivot point moving average script that you have and stuff that we talked about later, releasing that just to the members. Once we maybe put a file up somewhere on a server or whatever. We'll do that. Maybe we'll do that later, but we're going to just keep that just to the members only, and you won't be able to get it unless you're a member later, and you ask us for it later. But we'll make sure that's available to the members, of course. And but yeah, we'll get that to you, Seven. And I've got Tom Drott, and he's obviously very interested in Thinkorswim. I believe he uses it. He says, can you ask Chris if you can scan on TOS for a PPMA crossover?
Yeah, you can scan. I got some personal scans. I got a stochastics over sold scan. Okay, so if we do a stochastics over sold scan, if we're actually looking at it, you're doing stochastics full with K period equals 14, and it's less than the 25. That's just a basic right there. It's just a basic scan. You can actually type that in. You just type in stochastic full, and you just type this in. And you can type in these scans yourself. You can type in like EMA, EMA for exponential moving average. I do have notes as far as doing these scans for crossovers. I'm not actually prepared to do it tonight. So, but something like a scan, if you go to the scan tab here, you can do stochastics full K period equals 14, because John uses 14, 3, and 3. If the 14 is less than 25, then it's oversold. Okay, so let's say we want to go to the S&P 500. Okay, so we go to the S&P 500. You can either go to public, go to S&P, Russell 2000. Let's say we want to do the S&P 500, and then you just hit scan. What that's going to do is just scan for the full stochastics to be below the 25 period. So it's going to be oversold. So we got LO here. We got GS Goldman Sachs, CQT. We've got, let's look at LO. So we got, as you can see, that is definitely oversold. And this is a pretty interesting trade here coming up. What is this? Lord? I don't know. Let's look at GS. So, so we got Goldman Sachs here. So we definitely are under 25 because the K period is under 25. So we're oversold. So This you could start putting on your watch list to see, if we start crossing over. If we close above 103.96 and we're above the pivot point moving average, you might want to start jumping in. You might want to get in and see what we can do. You can look at SHLD, WFM, WPI. If you look at WPI, as you can see here, it has actually done crossed over, but we're still under 25. These are definitely oversold. You can either do stock plays on these, you can do option plays, things like that. If you guys want to do, if you want me to put together a video and we can put it up on the site, I can show you how to use this scan tool. This is a really nice tool to use. You can add studies here. You can add fundamental filters. This right here is the Thinkorswim language. So if we add a study,
they call it ThinkScript, right?
It's called ThinkScript. Let's go ahead and close all this out. If you hit reset and you close it all out and you add a study filter, you can actually add your own stochastics crossover. You can do crossovers for yourself. The slow stochastics, which is basically the same thing as full stochastics crossover, overbought, oversold. You can do oversold, K period 14, and then you can hit scan. And it'll come up with all your results if you do scan in all stocks, or you can scan in just the S&P 500, and you can hit scan. To be honest with you guys, I just like sticking with the S&P 500. As you can see here, we have a stochastics slow, which is oversold. We have GE oversold and VMC. So if we look at GE, as you can see, it is oversold. Actually, this is coming right off of, that closed right on a monthly pivot point. And also, another thing that I look at is candlesticks. As you can see right here, this is called a doji. You have a high, you have a low, and you have a open, and your close is right about the same area. This is a doji. We did not make a lower low. And we actually closed basically inside here. So what I would be looking for is a close above this little doji candle to go long to try to capture some profits here. That's what I would look at. And also the stochastics is oversold. This is actually a pretty good play. So what you could do as far as options, if you really wanted to play options in a low risk trade, you could come over here and go to analyze and go to your GE. Let's say you want to do November. You got 8 days to expiration. Okay, so we got 8 days to expiration. On your left-hand side, you got your calls. On your right-hand side, you got your puts. So if you want to go long, we go back here and we're at 1606. So if you want to go long, you can go long and you can go ahead and buy one contract, which is equivalent to 100 shares at $16. You're already in the money. It's only costing you $37 to put up this trade. Let's say we do 2 contracts. Okay, so now if we go over to the risk profile up here.
Well, now it costs you commissions too.
Yeah, plus your commissions. Now, with me, I've contacted Thinkorswim, and I get a little bit better commissions.
Already got a pop in ES, by the way. Just trying to cover a little bit of live action here. A little bit of pop there. We're at 1241.
Yeah, see, we got a buy trigger.
Volume's just poured in too.
Yeah, we're on a 30-minute chart, and we got a buy trigger right here.
I'm on a 1 minute. Volume's poured in. We're at 4150. 44. Hey, we got some news popping here. Why don't we cover this for a second and see what happens? Just put my ES chart up here. We just popped up to 46 there. Volume is pouring in. I don't know what's happened, but massive volume pouring in here on the ES. And of course, this if you guys are watching this and this recorded, this would have been November 10th, 2011, and right here around 9:38 Eastern time PM. Sorry to interrupt you, Chris. I just noticed that, man. It was like bam, volume pouring in on the ES too. So I don't know if anybody's got any news out there. No, Klaus, I don't think Obama quit smoking. I don't think so. Hey, what's up, Bry Guy? Late to the dance. If you guys are just joining us, RPM, and we've got Chris Hall and going over Thinkorswim and how he trades, and we just noticed the ES pop there, so I drug the ES chart back up here in view for you guys, and we just watched it happen, and right here in front of us, nice pop, volume poured in. You see it kind of hit this resistance level right here, and the stochastics were just buried up here in the ceiling, and then it couldn't take it anymore. Bam! We shot up like 5.5, 6 points off of that level right there. I don't know if maybe some news came out or what. Thanks, market. Does anybody out there Japan FX currency interventions? What do we got? We got anything coming? Black Bart says Kramer announced his candidacy for president. I think he did that the other night. Well, you know what? Maybe somebody fell out of the chair and hit the wrong button.
Yeah.
Or in that case, hit the right one. So we'll keep an eye on that, and we'll get back to Chris in the Thinkorswim. Now, this is some crazy looking charting stuff that I've seen you do a couple of times on the other shows, and I'm really interested in knowing more about how this Captain Kirk and Spock thing works there. That's charting the stars and all that. I mean, that's some crazy looking stuff on Thinkorswim. And I know you use that it's like your profit profile type thing or something for options on Thinkorswim. Is that what they call that thing?
Yeah. So, okay, let's say we're looking at GE, and we got a doji candle right on the monthly pivot, and we think we can go long here. So I'm going to go to my Analyze tab, and go to Analyze tab, go to Add Simulated Trade. And what you can do is, the first thing I want to look at when I'm getting ready to get into options is I want to look at the spreads. I want to make sure the spreads are pretty tight. We got a 1 cent spread here, which is pretty good. And also I want to look at open interest. Are they liquid? Can I buy and sell? Can I get out of these things pretty quickly? Well, they're 75,000, so obviously I can get in and out pretty quickly. But also I want to look right up in here. I got 8 days to expiration. When I'm talking about options expire every third Thursday of every month. So options are going to expire on the 18th right here. That's when they're done. So right now we really don't have a lot of time to do anything. But what we could do, and this is what I like to do, which is called bottom fishing, is we can go ahead and sell a naked put. If you go here and you click on sell, okay, now this is dangerous because you guys need to understand. I think most people understand if buying options, if you want to go long, you buy a call. If the stock goes up, you make money. If you buy a put and the stock goes down, you make money. What the professionals are not going to tell you is you can actually collect money just by sitting and waiting. So right now we're trading at 16.06, but let's say you would like to own the stock. Even at $16, you're willing to get in. Okay, so you can go over here to your Analyze tab, and you can go and buy, or you can sell a put. When you sell the put, that means you are naked, okay, which means I've got one contract here. My strike price is $16 because strike price is right here at $16. That means that if this stock trades down to $16, that means it would be in the money. That means I am obligated to purchase 100 shares per one contract equals 100 shares. I am obligated to purchase 100 shares, which is $1,600. However, you are getting paid 28 cents, which is $28, to try and get filled at $16. Now, if you don't get filled, and let's say this thing starts shooting up and it goes up to $17, $18 into expiration, which is on the 18th, you will still collect $28 minus commissions. Okay? You will still collect that money. So if we go to the risk profile here is what you need to understand when you're going naked. I call this bottom fishing, because sometimes I will start putting in selling puts and try to capture a stock. But this is a stock that I trust, that I'm willing to own, and I just want to try and get it at a really cheap price. I do this a lot in my IRA account.
Okay.
So what you need to understand is you are capped at your profit, okay? You are capped at your profit. So if this thing goes down to $16, let's say it goes down to $16, let's say you don't get filled, but then it rockets up to like 18 bucks here, okay? So it rockets up to 18 bucks. Your max profit is still $28. So you will get paid $28 because you were obligated to purchase it at $16. Okay, but let's say we got some bad news, or something happens and this thing goes all the way down to 15 bucks. Well, I don't know if it would happen, but anything below $16, you are in the money, and you could get put the stock. You could get put 100 shares of GE in your account. So you could wake up one morning and you'd be like, wow, I own 100 shares of GE. Okay, great. That's what I want to own it at. You would collect $28. This line right here is your break even. So if you get the stock put to you, your break even is at 1572 down here. Okay? Your break even is at 1572 because you are collecting $28. Now, I only do this with stocks that I really want to own because it could just keep going down. That's why I usually scale in. Do a couple puts. If I get the stock put to me, great. If it keeps going down, then I'll put one down here about $14,
Chris,
and I'll still try to capture some profits.
Question in chat room. Someone says they didn't know that naked puts were allowed in IRAs.
Actually, it depends on your broker.
Okay.
If they don't allow it for beginner traders, and your broker, it depends on your broker. Most brokers will not allow you to do it. Like, I mean, if you go with Scottrade, I don't think they'll allow it. Schwab, I think you got to prove that you got a couple years of experience before you start doing stuff like that.
Okay.
Now, Thinkorswim, the one thing I do like about Thinkorswim is that, you know, they'll let you trade. They're not as restrictive as other brokers.
MJ, I'm sorry. There was maybe some misunderstanding. You were saying, can you ask the guy something? I forget what you were asking me to ask him, but you were calling him the guy, and I was thinking that I had already mentioned we've got Chris Hall here, and we said that several times, when we started, and had been announcing it all day, and on the emails, and it's posted on the site and stuff. So what I was thinking is maybe you thought because the screen changed color and stuff, maybe you switched and we had two different traders on, and maybe, Chris, who's now talking, I thought maybe you were thinking that we had changed to a different guest or something, but it's still Chris Hall. So just misunderstanding, MJ. I'm sorry. But she had a question. Let's see. Let me back up in the chat room, Chris. I think this was the question. RPM, naked calls and puts, not for a novice.
No.
Okay.
No, and let me cover, like I'm covering naked puts because I call it bottom fishing. It's like putting in a limit order at like $16 and trying to get filled. I mean, you're getting paid to wait. But let me show you what could happen if you do a naked call. Now, Thinkorswim will allow, well, they allow me to do naked calls, which I definitely don't do. But let's say you do a naked call on GE. Okay, so let's say you want to sell, let's say you sell GE at a naked call. Okay, here's the problem with this. You're doing it at a $17 strike price. Okay, so you're selling it, which means you are obligated to sell GE if it reaches $17 and above, if the stock gets called away from you. But if you're selling naked, that means you don't own 100 shares of GE. If you owned 100 shares of GE and you want to sell it, then that's fine. But being naked means you do not own 100 shares.
Do you want to go over some of it, because we wanted to call this like options 101 basics, and we've kind of shifted around. And I mean, some people don't even understand what an option is all about. I know, and okay. I really don't know that much about options either. I know that in general it means you have the option to buy a certain, it's leverage is what it is. You limit your risk, but you can potentially maximize your profit on the trade. But there's another factor in there, which is like the things have expiration date on them. I mean, they expire to decay and all that, right? Yeah, so can you explain the general theory behind it?
Okay, now, all right, yeah. So what are options? And I have notes here now. What are options? It's a contract that is sold to one trader, the option writer, to another trader, the option holder. The contract gives the buyer the right but not the obligation to sell the security on an agreed price, which that is the strike price. Now, all contracts which are options, they will expire on a certain date, and you get to choose the date of the expiration. So right in here, if you look at Thinkorswim, this right here, as you can see in the middle, this is your strike price. Okay, and on the left-hand side you have calls, and on the right-hand side you have puts. Now a call gives the right to buy. The stock needs to go up to profit. So if you think GE is going to go up in value, you can purchase and in the money at 37 cents, which is one contract. Now, one contract is equivalent to 100 shares. So let's say it's at 1606. We go over to the risk profile. Now, this is limited risk when you're dealing with options. Now, this expires in November, which is 8 days to expiration. But my maximum loss is right here, the red line. The dotted line right here is your break-even point. Your max loss is your red line down here in your risk profile. My max loss is $37. It doesn't matter if it goes down to $10. I can only lose $37.
Because that's what the whole contract cost you.
That is what it cost me, $37.
Okay.
So let's say it goes up to $17 in 8 days. Okay. So if we go over here, and let's say we go to, let's say right up to the 17th, and it goes up to $17, my profit would be $63. As you can see right there in the white. Mm-hmm. It's like $63. Mm-hmm. Now, it is working against you. You have one contract that is equivalent to 100 shares. But you have time decay, which means this gets into what's called the 4 Greeks. In order to trade options, you really need to understand the Greeks, and we're just going to go over calls on this. So let's go ahead and reset these.
What's your chat room screen name? You don't come in the chat room very often because I know you work on this all day and stuff.
Yeah.
But
yeah, I think it's CHALL0311.
Okay.
Now, in order to trade options, you really need to understand what's called the Greeks. And this is not complicated. It's just something you need to understand. And it took me a while to really grasp the concept of this. But once I did, it was great. So the four Greeks, which is delta, gamma, theta, and vega. Okay. Now we have delta. And the delta here, as I have here, the delta on this 16 strike price is at 53 cents. Now delta, it's the change of an option price given the price movement of the underlying stock. So what that means is we go back over here to the risk profile. We have delta, gamma, theta, and vega. And this is what I love about Thinkorswim and the risk profile. They give you everything you need to know before you put on this trade. So the delta is at 53.65. Okay, and what I want to do is look at the middle here at the live. You have a positive 10% and a negative 10%. Don't worry about them. Just look at the middle row right here live. We have delta of $53.65. It's the change of an option price given the price movement of the underlying stock. So if GE would go up, now what I'm going to show you guys is right down here, this wrench. Mm-hmm. If you click on that wrench and you see the stock price, this is what I love about Thinkorswim. If you go up $17 and you change that to $17, mm-hmm. right now your P&L is negative $2.37. Okay.
That's what the brackets mean. Yeah.
But let's say the market changes and it goes up $1. Now it goes up $1. So now we're at a $72 profit, as you can see right here.
And that's one contract.
That's one contract.
And you've got how much you spent for it?
The maximum risk is $37. That's what you need to front this trade up. Right, is $37.
So at this point, you basically doubled your money. And the stock moved one point from 16 to 17.
Yeah, but I mean, $1 moving a $16 stock is pretty big.
It is pretty big, but that's 100%, a little bit more than 100% profit in your trade. If you had grabbed yourself 10 contracts.
Yeah, I mean, if you grab 10 contracts, I mean, you're up $720, and your maximum risk is $370, as you can see right here. Yeah. Now, right in here, you see 11/19 is the expiration date, and 11/11 is the current date. Okay, so the red line is your expiration date, and your white line is your current profit and loss.
Is this a standard type of display to represent, option the way Thinkorswim is doing it here? Because I think it's pretty cool.
I don't know. I've never used any other platform other than Thinkorswim, to be honest with you.
Gotcha. Yeah. See you, Michael Freeman. Thanks for stopping by, man. If you guys are just joining us, we're right at 10 o'clock here on the first hour. We've got Chris Hall going through his option setups and specifically on Thinkorswim. And of course, it's November 10th here, 2011, and we got people asking Chris in the room, about Delta and all that, how all that stuff works. If you want to, get into all that, you're doing great, man. Carry on.
Yeah. Now, now we have Gamma. Now, Gamma, I'm going to go back over here to just one contract because it's easier to explain and get people to get the grasp of just one contract.
Right.
Now, Gamma, it's the measurement of how the delta of an option will change. Shows the option delta sensitivity to market change. It's just a rate of change for delta. Okay. So delta and gamma kind of work together. It's just a rate of change. Okay. To market sensitivity. And I really don't want to get into that because that is getting a little bit more advanced. Probably understanding these four Greeks is the most important thing. So delta let's say for every dollar movement up, it's going to go $53 up. Now, here's the one thing you need to understand is theta. Okay, theta is the rate of decline due to time decay. Because two things will happen in the market. Prices fluctuate, stocks go up and down. That is certain. And another certain thing is your option will expire whether you like it or not. So right here, the option expires in 8 days. So theta is the rate of decline. So let's say we go in this trade right now. Your theta is negative. Your negative theta. You'll hear things like positive theta. But right now we're negative theta because we want the stock to go up. So your negative theta, you are paying out. You are losing $1.87 each day if the volatility stays the same. So each day you move up to the 12th. Now your theta is 199 because it is the rate of decline due to time decay. Time is passing.
Okay, it's basically a formula.
Expiration. Yeah, time's passing. You're getting close to your 18th, to your expiration. You're on the 16th, right here. Your theta, you're losing $2.95. So right now we're down $14 and the stock has not moved. Mm-hmm. If the stock has gone down to $15.50, we're actually losing $33. Maximum loss is $37. Mm-hmm. So you are working against the clock. You not only need to be right in your direction of the stock, but you need to be right in your timing.
Okay, so it's basically you're basically placing a calculated bet on when you think a stock will be at a certain price, not only if it's going to get there, but when it's going to get there. So you've got basically two parameters you're really trying to nail: the time and what price it will be. What price and when it will be at that price.
Yeah. Your direction and your timing. So that is the whole thing. Right now, if we go back to your daily chart on GE, I am thinking, I got a doji, and I closed right at the monthly pivot point. I'm thinking stochastics oversold. I'm thinking we could move up. Could we get up to $17 in 8 days? Yeah, we could. I don't know. I doubt it. So, but you are losing money on your theta. Time decay.
Yeah, because your timing is too far.
Yep.
So what happens then? We're into expiration now. Nathan has a question. Says, can you ask Chris about what happens? When expiration happens, do you have to buy the stock? Well, what's that all about? How does that work?
No, when you are long, if you go back here. If you are long your call and you purchase a stock, you're not obligated to buy it.
No, okay. If you purchase the option, okay.
Yes, if you purchase it, you're not obligated to buy it if it reaches that strike price. Now, what you can do, and this is what a lot of traders do, let's try to go out a little bit further instead of 8 days. And you can see right here your expiration's at 8 days. Mm-hmm. Let's go to January. Okay, let's go to 71 days to expiration. So let's go to January. Let's say we want to buy now. As you can see, the strike prices have changed. It's now at 17.5. So let's say we purchase. We want to buy one stock, or you can right-click and go to buy single option. Okay, and you'll buy a single option.
Trade for Pay just had a point. He says if you need to think about the T in theta, that represents time.
Oh, I didn't think about that. That's awesome, dude.
T for time.
I didn't think about it that way. That's awesome.
Yeah, those country boys should get that.
That's actually that. You know what? I'm going to use that. If you don't mind, I'll use that in one of my educational videos.
Yeah, I don't know why they just don't rename it time.
Yeah, really, man. I mean, what's up with these 4 Greeks, man?
Yeah, I'm telling you.
Oh, well. But let's say you buy, and you got 71 days to expiration, so you got some time for this thing to move up to $17.50, okay? So, and let's go back over to the risk profile here. Okay, now we've got theta. Actually, if you look at the delta, which is...
And Yeah, he was
change
saying
the price.
D for delta equals dollars. D for dollars.
Yeah, because you're either making it or losing it.
Yeah.
For every dollar it goes up or down.
There we go.
Yeah, you know what? That's actually pretty good. Who's saying this? Trade for pay?
Trade for pay was saying, the T for time and
T for time and D for dollar for every dollar move, I guess.
Yeah. And Night, I think, said the other one, D for dollars. Yeah.
Yeah. All right.
Yep.
Okay, so we got theta. We're losing 49 cents. Each day that passes, we're going to lose 49 cents, but actually it's time decay. The more time goes by, the more money you're going to lose. As you can see here, we just keep going. As you can see, the time's passing by right down in here. Time's passing by. We go past Christmas. We go to the last week of Christmas. We go to the 30th. Now we're losing 59 cents. We're actually down $27. You need to be right in your direction.
Yeah, if you're wrong in your direction, you're really screwed. You're
gonna lose money. But let's say you are right in the direction, and let's say by January, let's go over here to January. Let's say Monday, okay, and you're at $17.50. Okay, as you can see on the white line, you're making like $13. Okay, that's not a whole lot. That's just one contract. But $13 and you only had to front up $36. That's your maximum loss is $36. That's a pretty good risk reward, to be honest with you.
Mm-hmm. There's Trade for Pay's got another one. D is G is gamma for go. V is vega for volatility.
That's pretty good.
Trade for Pay, he's been trading 35 years. I just don't know why when he invented all this, didn't he just put all that on there to start with?
Yeah, I mean, I had to learn the definitions of them. So that's the one thing that, you need to be right in your direction and your timing.
Yeah.
I mean, if you're going to go long these now, I don't trade just straight up calls. Now, I do go naked puts. And I'll be honest with you guys and girls that I do go naked on my puts because I'm bottom fishing. I don't mind owning a stock if it's like a $25 stock and I want to try to bottom fish it for $20 or whatever. I'm willing to own it. And if you go naked a put, you better be willing to own that thing at that strike price. What I like to do is, see, you're negative theta here. What I like to do, and this is where I like to capture most of my money. Let's say we go over to Apple. Everybody loves to trade Apple, right, guys?
It was pretty today, right?
Yeah, I mean, look at that.
Tanked.
Look at that. It tanked. It's selling off.
Yeah, I'm short. I've been short from $3.99.61, I think, back about a couple weeks ago. Not a whole lot, 10 shares.
Yeah, if we look at this trend line right here, I mean, we got somewhat of a channel, don't we, guys?
Yeah.
Yeah. So, and we kind of broke the monthly pivot, but we got support down here. Mm-hmm. Where's the other support? We got it right down here on the monthly pivot at 363.
Yeah.
So, what I would like to do I don't like to pay out theta, and this is where I learned from Tom Sosnoff at Thinkorswim. I used to watch their educational videos. Every week I would log in and listen to the option traders and this and that, and I read option books, and to be honest with you, I never learned a daggone thing from them. I learned by paper trading and trading real money and listening to other traders. Mm-hmm. I did not learn options until I actually learned it from a 30-year veteran. And once he showed me the light, I'm like, are you kidding me? It's that easy. I mean, why can't people just, I don't know. I guess the professionals don't want to just give it out to anyone. But let's say we want to trade Apple, okay? And we got support here at 385 and also 363. What I like to do instead of paying out theta, because I would like to collect money, okay? I'll go over here to the Analyze tab. I'll go to Add Simulated Trade. What I will do is, let's say you want to go into December. You can put on what's called a calendar spread. And if you right-click, let's say we're trading right at 385, okay? So I'm going to put a calendar spread on that at, like, let's say 390. So you go to the 390 strike price. If you right-click, go over here to Buy, Calendar. Now, a calendar, you are long, well, you're short the January call, but you are also, you are short the December call, but you're also long the January call, okay? You have some insurance. You're not naked on this call, okay? So you're not naked on this. If you go over to the risk profile,
they're mad at us again, Chris.
Why?
They say we're getting a little bit too complicated.
Okay.
They don't like it when you trade naked. I've been doing it for 3-4 years. It is kind of overwhelming. I'll admit, I still don't really get it. I wouldn't. If you called me up and said, RP, I'm on the road, can you please log into my Thinkorswim account? I need you to make a trade for me real quick or take one. Sorry, man. No speak English. I ain't doing it, man. I'm terrified of these things. This is so complicated for me. Now, I'm not saying that, somebody with a brain couldn't do it, but I don't qualify for that. So, not when it comes to this stuff. I'm telling you, it is, I'm impressed, but scared too. I can understand a lot of people are like, wow, this is crazy, So,
yeah.
All right, keep going, buddy. Sorry. Thanks, Larry Jet. Appreciate it, buddy.
Yeah. Okay, if you want it, a calendar spread is basically you're buying a call in January at the $390 at 390 strike, but you're also selling a December at 390 strike. Okay, and if you look at this, as you can see, you're not just totally.
Yeah, most people want you to continue on what you were on to. A few people are a little bit, overwhelmed.
Yeah.
But this is pretty fascinating.
Yeah. See, a calendar spread. If you just okay, let me go back here. Let's say we just want to buy a call in December. Okay, we just buy a call. It has to go up. Okay, so we buy a call. So you have to front up $1,420 up here, okay? So that's how much money you have to put up on this trade. In order for you to be right and make money, Apple needs to go up, okay? So what I am doing is I am purchasing okay, in December, I am selling at 390 strike price, okay? But that right there would be naked, which means if the stock goes up past $390, if it keeps going up, someone could exercise their right and say, okay, I want your 100 shares of Apple. Well, you don't own 100 shares of Apple. If this thing goes up to $450 and they exercise their right, you purchased it at $390. Now you have to go out into the market and purchase it for $450 and sell it to that person at $450, which you would lose $4,800. Okay, that is your obligation. That is being naked a call. That is something you absolutely never, ever, ever, ever want to do in your life.
You got to have that exactly right, or you are really going to screw yourself.
You're screwed. I mean, I hate to say it, but you are screwed. And I just hate to put it that way. You never, ever in your entire life ever want to sell a naked call because of this reason right here. Okay, but that's selling a December call, which means you are collecting theta. If you look at the risk profile, your theta, you are collecting $22. So each day this thing does not go up past $390, you're collecting money. Okay, you're getting paid. And you can close it out early. You don't need to wait for expiration. You can close it out early. However, I don't like doing that. That's being naked, and I need some insurance. Okay. So I'm going to put some pants on here, and I'm going to purchase. In January, I'm going to purchase a 390 strike. Okay. So basically that means if this thing goes up to $3.90 in December, and let's say someone exercises their right and say, okay, I want your shares. Well, you are purchasing the January. You can go ahead and exercise your right and then go out and buy it and then sell it back to that person. And you're not, I mean, you're going to lose money, but you ain't going to lose your pants. Okay, so now if we go back to the risk profile, we have what's called a calendar. You're selling the December and you're purchasing the January. Okay, you have your front and back month, okay, that you're selling and buying. But because December's will expire before January's will, you are collecting theta. However, if we get rid of the January, you're collecting $22 in theta. That's how much money you're collecting a day. However, if you were just long, you would be losing $17. But if we put the two together, since December expires before January, you are collecting theta because you are selling a call, but you have purchased a January call for insurance. You are still collecting theta. You are only collecting $4.41 each day. So let's say we go down here to November and we're at November 30th. Okay. So time has passed. And let's say this thing does run up to, let's say, 390. Okay. So it runs up to 390. But we're at 1130. Guess what? Your P&L is $135. So now, as time passes, because you're getting close to December's expiration, let's say the 9th, since you are short the $390 call because you're selling it means you're short, but you have purchased a January 390 strike for insurance, just in case this thing goes up to 400 and someone says, okay, I want your December calls. You have to go out and purchase 100 shares of Apple and sell it back to that person. Well, guess what? You don't own 100 shares, but yes, you do because you got the Januaries. So you can go out and exercise your right in January, purchase those 100 shares, and then sell it back to the guy for your December calls. I mean, I hope you guys follow me.
Yeah, I think so. Everyone still asks the question, do we record these things? Absolutely.
Yeah.
Yes.
And I've got educational videos that you guys can look at, and I'm going to put them, I'm going to get with John and put these out there. I mean, I've got pretty good educational videos. You guys can sit there and look at it over and over and over again, and eventually you'll get it. Guys, it took me a year, almost a year, just to understand the basics of this. I mean, it is not something you're going to get overnight. This is not just buy low, sell high. This is not like it. This is how the professionals in the market make money. You listen to those guys on Fast Money and all that, and all that. This is how they make their money. Because it only cost me $935 to put on this trade. That is the only margin that is required, right down here. That's my max loss. However, if you look at this and we're a week to expiration, your break-even point is right here. So Apple would have to go down below $370 for you to start losing money. Mm-hmm. And Apple would have to be trading above $415 for you to lose money. Okay? So, and this is for the December expiration.
So doing it this way, you're trying to kind of find a sweet spot.
I don't care if it goes up. I don't care if it goes down. But I do care if it gets past my strike prices for where I'm losing money.
Right.
And if you come back here, since basically I'm selling the December 390 and buying the January 390. But if we come right over here to Thinkorswim, when you say, okay, I got 36 days to expiration, I go to December, I'm looking at the 390 strike, I want to right click, buy a calendar. That is the same thing as selling the December and buying the January. So you're not naked. And you go over to your risk profile, and it's the exact same thing.
Right. Rollercoaster has a question. You want to take it? Says, hello, Chris. How can you predict the future price of any stock if it's going up or down in a very volatile market? Yeah. I mean, I guess.
You can.
Yeah. we still have to try to figure out what the stock's going to do, just like, like Johnny, looks at the charts and looks at the multiple indicator setups and all that. You still can use those same techniques and that education to figure out and try to predict what a stock is going to do. That's when we buy regular common shares. We're doing the same thing. I guess this, you need to kind of think about that. You don't just wait on one to hit your target. You kind of have to think about the timing and when you think it's going to get there too. So it adds kind of another dimension to your thinking.
Technical analysis for options trading calendars is something you really need to know. And I've learned it from John, technical analysis. I just learned options from other people, from a veteran trader. Now, this is not the holy grail. You will lose money trading options if you want to play calendars. Okay, I play calendars out the yin-yang. Do I lose money? Daggone right I do. Yeah, last year I lost my butt 1 month. And I didn't think so. And I thought, I was like, I know what I'm doing. And I lost my butt. Can you lose money doing this? Yes, you can. Just like anything else by buying common shares.
Now, but if you nail them right, the potential for upside can be huge.
Oh, yeah. I mean, it's good. Because if we look at Apple here, and I'm doing my technical analysis here, I'm looking at 363. So if you look at, let's say, round off to 363 is the low here. That's when I would say, okay, I'm wrong in the trade. I need to get out. Okay. But then if you look at the top here at 440, so we got 363 and 440. We got the top of a channel here at 440. It would be resistance. We got support right here, but we got another support at 363. So I'm going to go back here, and I'm going to look. I'm going to start playing around with my calendars. I'm going to say, okay, December. Do you think in a month that we're going to go past 360 or down to 363? We could. Up to 440? We could. But I'm going to go right here, and I'm going to go to right-click, buy calendar. And if we do get to 363, okay, let's say we get to 363 on the 11th, let's say on the 18th, let's say we get to 363, okay? We get to 363, and I'm losing $135. Okay. Let's say I'm losing $135. Okay, do you want to get out of the trade or do you want to stay in it? I mean, there is a stop loss you need to be at. Okay, so then we got up to 440. Okay, so if we go up to 440, you could potentially lose $285. I mean, you have the potential of losing money.
What's your potential profit on this trade?
Potential profit is if you stay in between 370 And because right here is your break even, you see that little red tick. This red line is your expiration line. As you go closer to expiration, that red line is your expiration date of December, third Thursday of December. This right here is your break even point, and this right here is your break even point. So we could go to 370 at expiration and break even. We could go to 413 and break even. Now,
what's your potential profit on this trade?
Oh, I'm sorry. Potential profit is, let's say we stay at 390. Let's say we go to December 9th. Let's say we go to December 9th. And let's say we're at 390. You're making $300. Okay? The money you had to front to put up the trade is $900. Well, 918. But, yeah, $900. So that is what you're looking at. It's just a way that you are leveraged. You don't put up a lot of money, and you can make money. However, do I hold calendars into expiration? Absolutely not. Let's say we go into 11/11. Let's say we go to the 16th. Okay, we go, let's say, right at 18th at this month's expiration. And we're running up to 390. Okay, if you go up to 390, you're making $50. That white line is your profit. You're making $50, and you have to front up $900. What you could do is close this trade out and take your $50 profit minus commissions.
Yeah.
So, you don't have to hold it at expiration. You can close out early.
Is there a pattern day trading rule with the option trades?
Yeah.
Okay. Nathan asking why? Wait a minute. Did I get the roller coasters? Yeah, I did. Why don't more people buy puts when they want to short a stock, other than shorting the stock itself? It seems like there's less risk.
Yeah, there is less risk. Yeah, because if you want to short a stock, what stock do you have in mind? You want to short?
Apple. I shorted at $3.99.61.
Okay. So let's say we want to short it. Let's say we short it.
Ago,
yeah. So you want to short Apple. We go to add simulated trade. Let's say you want to short Apple, and go to 385. Let's say you want to buy a put to short it.
Yeah.
Which means you go to the risk profile. Now, if you look at your risk profile, if Apple starts ripping up, you're going to start losing money, as you can see in the white line.
Mm-hmm.
Now, your max loss is $1,640.
Mm-hmm.
But let's say it starts going down. Let's say it's at 385. Let's say we go over here and let's say it goes down to 380. I think I lost connection on my...
Think or swim?
No, I lost connection on my...
we still see
Mac.
you. Still see you.
My Mac keyboard. So let's say it goes down. Okay, so now it goes down. Now your P&L is $220. So it went down. You wanted to short it, so you bought a put. You had to front up $1,600. Let's say $1,640.
Yep.
That's the money you had to front up. And let's say it went down $5. Well, you would make $220.
That's pretty good profit for what you had to put up on it.
Yeah, it really is. So then,
and the faster that happens, the more money you make.
Yeah. I mean, if it starts accelerating and really starts going down, the more money you make because you're theta.
Right.
You're negative theta. You're going to be losing $22 a day. So actually, the next day, if 2 days go by, you're actually making $175. Okay, because you're theta. It's working against you. it really needs to go down. You can day trade this stuff as well. If you want to day trade, you want to go to a shorter time frame. Let's say November on the 8th. And let's say you want to buy Apple. You go to your risk profile. So now you want to buy Apple. This is kind of bad because we're after hours.
Yeah. We just got another pop in the market. I just happened to look over here. More volume just pouring in here. We just hit 49 on the ES. 1249. Yeah. Another pop. Remember we had this pop back here, and we just had two nice 1 minute candles here. We've kind of flattened out, and bam, we just hit again, man. I just put the chart up here for a minute. If you guys are just joining us, it's about 10:30 here Eastern, and
right. I got my connection back on my keyboard. All right. So you want to go over?
Bry Guy, it was a few weeks back. It was right when I didn't think it was going to get over 400, and I think it did, and it didn't go really badly against me, and I just held it. It's the only short I've done this year.
And actually, and you can trade options on the futures as well.
Ninja, this is Chris Hall, and Chris has a question. Ninja has a question for us. Could you please ask your guest how he calculates if an option is expensive or cheap relative to the stock prices?
How it's cheap?
I closed it out, but how do you calculate whether or not a option is, cheap or inexpensive or a good deal or whatever? How do you figure all that in relative nature to the actual stock?
All right. Okay, and this is not picking on BlackRock. Okay, guys, I just wanted you to know BlackRock's a good company. I like it, but I don't trade options on BlackRock. Okay, and if we look at BlackRock, BlackRock, well, like any banking stock, or anything is getting clobbered. Okay, so I just want you to know there's nothing against BlackRock. But when I am looking at an option, one of the main things I look at is your bid and your ask. It's just like your spread on a stock, your bid and your ask. You got the same thing with an option, your bid and your ask. So if you look at the bid and the ask on BlackRock, you got $4 right here on your bid. Your ask is $4.70. You got a 70-cent gap in between there, which means if you go in one contract, you're automatically down $70 if you go in market. If you buy market, you're already down $70 because of this big spread. That is the one thing that I look at if an option is a good buy or not, is the bid and the ask. I stick with most of the good quality stocks. If we look at Amazon, we got a 278 and 286. That's basically, a pretty tight spread. Granted, we are after hours. During hours, there would probably be a 5-cent spread, which means a $5 spread, per contract. That's one of the major things I look at to see if it's a good deal. Okay. Also, I look at the volatility over here and the implied volatility of the stock, okay, for that month. That means the implied volatility is, how much. If the stock moves, you're either going to make money or lose money pretty quickly with the implied volatility. Yeah. And the way the market is, the volatility is outrageous. If we look at Apple real quick, okay, we've got 510 for the bid and the ask is 520. This is after market hours. During the market hours, it'll probably be, like a 5-cent spread, which would mean a $5. If you buy market, you buy a call market, you're already down $5. That's really no big deal though for Apple, because your theta, I mean, it's 39. Well, it's 8 days expiration, but I mean, that's one of the major things I look at is the bid and the ask before I even get into a stock for an option to see if it's a good value. Also, go ahead.
I was going to say, can you set like alerts and everything on the options prices, or do you have to, or can you only do that like with the actual stock common price on the stocks?
No, you can set alerts on those. Because
I know the options sometimes can be really, like Cousin Vinny all the time, hey, I'm thinking about getting this and this and this. He's always playing the options, and it's because it's an unbelievable bargain for him just because of the way they're, those options are going, what they're going for, and the stock itself might not necessarily, look all that cheap, but that the options do. So I'm just wondering, you can set alerts and everything in most of the platforms, right, for the certain prices on the options as well, right?
Yes.
Okay.
That's a little complicated, but yeah, you can do it, and you can set stops in your options. Like if this stock reaches a certain price, go ahead and close out my call or my calendar or whatever. Yes, you can do that. That's a little bit more advanced with Thinkorswim, okay. But yes, you can do that. Also, another thing that I want to make sure it's a good value: open interest.
Okay.
You have got to make really sure this thing has good open interest. Open interest on Apple, you're talking thousands of contracts.
Now open interest basically means that's how many people who are involved in it, and how much volume kind of deal is going on with it, right?
Yeah, open interest, think of it as volume. Okay, is it liquid? Let me try and find a non-liquid stock, which I really don't even know. Okay, FSLR, First Solar. Okay, if you look at Apple, or let's say you look at GT Solar Instrument. Okay, here you go. Instrument Solar has no options. Well, this stock doesn't even have any options to buy or sell. But let's say we look at Amazon. We're looking at 4,000 open interest. 4,000. You look, that's pretty liquid. At FSLR, you have a pretty good spread. During market hours, there'll probably be a pretty tight spread. But also, you got to understand your open interest is in like a couple hundred. So how liquid is that? The thing is, you can always get in and out market orders.
Right.
But you need to be careful because you don't want to get stuck into something that's setting up, but the open interest is only like 10.
Right.
And you can't even sell the damn thing.
Right, and that's the same thing really with any stock too. Same kind of deal. If you're going to buy something really dirt cheap penny stock or something, you get suckered into paying too much for it. Next thing you know, you're trying to get rid of it for the next 3 weeks. You can't, it's the same kind of thing. You need liquidity.
Yes, liquidity. You need it.
And that right there tells you whether or not there's interest in it. So.
Yeah, and that's one of the major things that I do look at. To be honest with you, I've got stocks that I've got a watch list of just option stocks that I just flip through and I take a look at. And I'm a pullback trader because I learned from John. I like buying pullbacks. If we look at Goldman Sachs, we had a pullback. Okay, Goldman Sachs, or I'm looking at X, U.S. Steel. Yeah. U.S. Steel. U.S. Steel is, we're coming down to 2410 is the pivot. Okay, we've got stochastics is starting to run back down, so I might be interested in this pretty soon. Mm-hmm. So I like buying pullbacks, and that's what I like to do. And when a stock is pulling back, the call in that stock is going to go down in value. Okay, so if you want to buy December, see right now, the stock right now, okay, is at $3.20 for January. Okay, so for U.S. Steel, it's at $3.20. So let's say if it keeps going down and you don't purchase it, but it keeps going down to like $25, it's going to be even cheaper than fronting up $320. You might have to front up, $250. So I like buying pullbacks, and that's probably why good value on the stock. Well, it's. You still need to do your technical analysis the way John explains it. It's just with options, you don't have to front up $2,500 to go in 100 shares. You might have to front up just a couple $100.
Black Hat. RPM is the calendar spread usually 2 consecutive months?
Well, a calendar spread is a front and back month. Okay, so let's look at let's look at U.S. Steel here. Okay, so we got U.S. Steel. We got a trend line down here. Let's look at this. Let's say. Okay, just real quick. So let's say we want to try and it might want to pull back, come down to the pivot here. Let's say $24. Okay, so I'm thinking we might slow down at $24 around here, and then we're going to pull back up, because usually when we come back, from what I've learned from John, you might come back halfway in, which could be at 24 and then pop through. So let's say I do want to do a calendar on U.S. Steel. Let's say, and to be honest with you, I don't like doing my calendars up to 8. I mean, I like being around a month, like 30 days. I like being around.
Okay.
So let's say we want to do a calendar. We want to buy, right click and buy, and scroll down here to calendar. So you are selling the December at the 26 strike, and you are purchasing the January at the 26. It has to be 2 months, and they can't be in the same month. Okay, I mean, we could actually flip this to April if we really wanted to. And if you look at the risk profile, now you see what April would look like. I mean, the expiration's December. So, I mean, it's not something realistically you want to do. But if we look at the risk profile, because we right-clicked it in the Add Simulated Trade, you want to right-click at the strike price, which is $26. December, you are short U.S. Steel in December, but you are long in January. So even if this stock rockets up to $30 and someone exercises their right in December and say, all right, I want my shares. Well, guess what? You don't have to go out and purchase it at $30. You go out and purchase it at $26. You just exercise you do an early exercise, and you go out and purchase it at $26. I mean, yeah, you're going to lose money because these two options are not in the same value, but you're not going to really lose your butt. Okay. You don't have to go out and buy it at $30 and then sell it back to the guy at $26. Does that answer the question?
Man, I've got so many private messages from so many people.
Yeah. But your break even in December, okay, your break even would be U.S. Steel going down to 26.70 is your break even. It goes all the way up to $30.40 is a break even in December. Anything in between there during December expiration, you make money. Now, there are ways to make adjustments in your calendars. So, and this probably really blew people's minds. Let's say the stock runs up to $30. It's getting close to your expiration. Okay, so it runs up to $30. And I'm going to start putting on videos of live trades I'm actually doing, making adjustments, so you guys would really be able to grasp it. I'm going to start making live trades of this and videotaping it during market hours, so you guys can look at the videos and understand what I'm doing.
Watch them later. Watch them actually as they happen.
Yeah, and then watch them later, but they're going to be live trades that I'm actually putting on, so you guys can understand why I'm making adjustments and stuff like that.
You almost have to do that, though, because you got to do this during market hours for the stuff to make sense. Yeah.
So let's say U.S. Steel runs up to $30, and it's getting pretty close to your break even for December. So then what you can do is, you did a calendar at $26. You could put on another calendar at $29. Okay, you could buy another calendar. Okay, you can put a calendar on top of a calendar, and when you go to your risk profile, now your break-even point is even wider. So now it ran up to $30. Before you put that trade on, if it ran up to $30, you're pretty close to your break-even. But, I mean, do stocks keep going straight up? Yeah, they do, but more than likely not. I mean, you just need to do your technical analysis at the time and find out, do I want to make the adjustment or do I want to take a small loss? Or you could put another calendar on top of a calendar, same front and back month, December and January, at a $29 strike price. So now your break even is right around $32.60, okay? So anything in between U.S. Steel, if, let's say in December, we go to December here, let's say December 9th, a week before expiration. Let's say a week before expiration, let's say it's run up here to $31, okay? It's up here to $31 in December. So we go back to the risk profile. At $31, well, guess what? You would be making $70. And it only took you $186 to put on that trade, as you can see here. Mm-hmm. This is how professionals make on CNBC and all the other stuff make their money. It's something that you're not going to really learn in a book. It's just from other traders. I didn't learn this in a book. I learned this from another trader showing me this. Mm-hmm. How to make adjustments. Most people, if they're on calendars, if the stock runs up and goes to their break-even point, they're like, oh, it's just going to keep running up. So they close out. And all of a sudden it pulls back, and they're like, oh, man, I could have made money. Why not just go ahead and throw in another calendar and get your break-even point back out there a little bit further? You might not make as much money, or you might just break even, or you might even make a profit. Or you might be like me that one month that with Deere just kept going down, and I kept making adjustments, and it kept going down. And I went to war with it and lost my butt.
You got your butt kicked by a deer.
Yep, on options. I'll admit it. I got my butt kicked by a deer on options, on the calendar spreads. I kept making adjustments after adjustments. Got my butt kicked. It was a bad month. I mean, that was a really bad month. I mean, the market just kept selling off, and I'm like, oh, my word, it has to stop. And it didn't.
Yeah, it doesn't have to stop. That's the thing. I mean, I think you know how many times I've said that when when the market's running like crazy and I'm short, or the market's diving like crazy and I'm long. It has to stop at it. No, it doesn't.
No, it doesn't. No. But guys, one of the things that I really want you to understand about options is if let's say you do U.S. deal and you want to do a calendar, okay? This is something that I learned from this gentleman. This is not a day trade. This is swing trading, basically. You do not need to watch this thing day in and day out. You can come up in the morning and say, okay, I did an option at a $26 strike price on U.S. Steel. I wake up tomorrow morning, I put on that option. Okay, it moved $1 for that day. Oh, it went up $1. Oh, okay, so big deal. Oh, it went down $2. Big deal. Who cares? You've got a wide area for your break-even points right here and right here. You just log in during the day, in the morning, before at work, and be like, okay, do I need to make an adjustment? No. Or you check it before market closes. Do I make an adjustment? No. News comes out. Unemployment numbers come out. Stock rips up, rips down. Who cares? You are not scalping the market. This is a slow and boring way to make money. But this is something that you can do at a full-time job. I work full-time as a software engineer. It's something you can do at a full-time job. It's slow and boring way to make money.
So, would you say that it's safe to say that once this thing clicks in your head and you kind of figure out and grasp the idea behind it,
you will do it.
It will change your way of trading.
It changed my way of trading. I very rarely do I go buy 100, 200, 500 shares of stock and just go long. Mm-hmm. My Thinkorswim account with my margin account, I am strictly trading options. My IRA account, I don't strictly trade options. I mean, but I do trade options. But yeah, it will. Once this clicks and it gets into you, you will be like, wow, this is how professionals make their money. When you hear people, the professionals say, I make money if the market goes up, I make money if the market goes down. When I say that to people out in public, and they're like, oh, so you trade? Yeah. Are you making money? Yeah. How? I make money if the market goes up or down. I don't care.
Yeah.
I mean, and they're like, really? Because most people understand you buy low, you sell high. But that's not necessarily with options. Because once you put your calls and your puts, either a call, you're either long or short a call, you're either long, short, or put. But if once you start putting the combination of buying and selling calls or buying and selling puts together, you start putting together combinations, instead of paying out money, you are collecting premium. See, in this calendar spread with U.S. Steel, you are collecting 93 cents. As expiration, as time decays, your theta is going up. Now you're collecting $1.22 a day. Okay, big deal. So let's say you go to the last day of November. Okay, big deal. It goes up to $27 because it ran up, it ran down, it ran up, back and forth for a couple weeks, $27. So you made $20.50, big deal. But you only had to front up $98. So that is a pretty big deal. And with Thinkorswim, I called them and I trade so many options. I get a pretty good deal on commissions. Because I trade options, and I trade the amount of options I trade, I get a pretty good deal. But this is only one contract. If you bump it up to 10 contracts, and you only have to front up $980, but yet a couple weeks go by, U.S. Steel goes back and forth, up and down, and you're at $27, and you make $300. That's a big deal.
Yeah. Agree.
It's something that you really need to grasp. I mean, if you're interested in this type of trading, it's slow and boring, but the amount of money you can make, and it's relaxing way of trading. I mean, you don't have to look at this every hour. You look at it in the morning, before the market opens, find out what the market's doing. When the market's getting ready to close, either close out your position or add to a position or whatever, or make an adjustment. I mean, it's just a nice, easy way of trading, and I love it.
Chris has been great, man. We just put in 2 hours.
Yeah.
We appreciate it, and hopefully it's starting to sink in a little bit more for people. We had about 30 or 40 questions.
Yeah, I'm going to try. I mean, right now I'm putting together educational videos for like very option basics that people can watch over and over. They're like 10, 15 minutes long. I'm going to try and get with John. I mean, you guys know I'm developing some of the sites for John. I mean, I'll put the videos up there.
You ought to put up a YouTube channel, man. You know, they have HD now. And you can get rid of all the ads and all that. You don't have to turn that stuff on, and we can link people to your YouTube channel in the room. And Cousin Vinny's got one now. It's pretty cool. And he does a pretty good job with it. And
once this clicks, and it's very frustrating. It is very frustrating to learn how to trade options without just buying calls or whatever. I mean, doing calendars and vertical spreads and iron condors, it sounds all complicated, but it's not. Once it clicks, you're going to be like, wow, this is awesome. If it's your type of trading. It's just, it is very frustrating, and I will admit it, but just stick with it. Eventually you'll get it. You might get it quicker than me. I mean, it took me a while to get this. I guess I'm stupid. I don't know. It took me a while to grasp it.
I don't think you're stupid. Stupid is as stupid does.
Oh, man. People will be cracking on us again, Paul.
Yeah, they are going to. Some of
them dumb rednecks and their options.
Oh man, the YouTube video we put, the last trader spotlight, went up on the YouTube channel. A couple of people posted in there. These are some dumb country hicks or whatever, and then somebody answered behind it and said, "Yeah, but there's some money making dumb country hicks," or something like that. And they started a war in the feedback on the YouTube channel. I thought that was funny.
Oh, man. But nothing's more funnier than that washing machine passing us on 90, what was it, 95 south?
Yeah, got passed by a washing machine. That was fun, man. We got to do that again sometime.
Oh, yeah. If you guys ever get to go hang out with John in Nyack, do it, man.
Or anywhere.
Anywhere with John.
That is a party. I'm telling you what, man. That is a partying crazy guy, man. He's a ball of fun. Just a lot of time. Yeah. And tell me he didn't treat us well, man. I mean, he really did, man. How about the food and everything, man? And it was a great time. And I wish we just could have gone for longer, you know.
I guarantee you ain't going to eat like crap when you're with John.
No. Mm-mm. He knows how to take care of his friends. He really does.
I mean, I'm like, dang on, John. I mean, like, you got some class.
Yeah. And he just looks at you like, I'm just a mailman that got pissed and quit. You know?
Yeah, mailman that got pissed and quit and learned how to trade stocks. But man, you got class.
Yeah, you see, he's come from pretty much not a whole lot. You know what I mean? He's a self-made guy. I have a lot of respect for him. He's one of my heroes. You know, I mean, he really is, and just glad to be part of all this with him. You know,
he bailed me out. I'll never forget the time I blew up my account with. I was with Scott Trade. I blew out my account. Just blew it out. Just bam.
Yeah.
Then I was like, oh man, I only got so much money. I'll trade penny stocks. That's what I'll do. I'll make it all back.
Yeah. All right, now everybody now in the chat room is asking us, for some of your details on some of your indicators and stuff. So maybe after we get done with this show, we can get that together and put it in can you export like the ThinkScript file, or could do it with like a little notepad file or something?
I can actually export it to an actual ThinkScript, so where you guys can import it right into Thinkorswim. You don't need to code it. You just import it right into Thinkorswim. There is a way of importing it right in.
Cool. I'll just drop it up on one of my servers and give everybody just straight up link to it. We can do that.
Yeah. I mean, there is, if you go to add studies, there's a thing that says import. And I can actually even put a video together to show you how to import it. I think I got one out there.
All right.
Yeah, I don't care. I mean, I wrote the indicator. I spent the time. I don't care. I'm not after to making money off of it. You guys want it, you can have it.
Yeah, and the thing is, somebody might be able to tweak it and say, "Hey, I found a little bit of tweak here. Might make it better, and it might pay back to you. You might find out that little bit of tweak or something may be working or something, and it's a collective thing. It's good. And that's really what day trading radio and the community is all about. I mean, people helping each other and.
Yeah, and there's programmers out there that know how to do programming ThinkScript, and you can make it better. I mean, shoot, make it better. Send it back to me.
Exactly. So, US Dad says, just 3 easy payments of $19.95. Call now.
3 easy payments of $19.95. Yeah, I don't care about that, man. Man, if I gotta make money off of writing my indicators and try to sell it to you, nah, screw that.
Well, you kind of screwed yourself already because you're going to give it to us. So, it's good, man.
I make money doing my career and trading options. I don't care. I'm happy to help you. I mean,
people joking on it in the chat room. You're already in the right place. If you're talking to us in the Day Trading Radio chat room, you're going to get get to sample these scripts that and these indicators he's already written. So we're going to give them to everybody in the chat room. So for those out there that are watching or listening to this, from a playback show. Well, let's just put it this way: if it's not 11 o'clock Eastern Time PM on November 10th, 2011, then you missed the opportunity to get the file and or files. But hopefully everybody get a little something out of this with us. And man, it's been a pleasure, Chris, and I really appreciate it, man.
Hey, no problem.
I'm gonna go ahead and close out the team viewer presentation, and we still got him on the line here though. Yeah, get the little ES back up here. That was pretty crazy action, man. We had a nice couple of pops there, man. We were, when we closed, we were in that about that 37 area, and we popped all the way up to like 48.
Oh yeah, we did. Yeah, I'm looking at the hour chart. Yeah, oh man, look at that. We popped right up against the intraday resistance pivot. Yeah, look at that. Pivot points work. That's why I like them.
Yeah, the Dow futures right now are up like 112. I always kind of look at those as kind of I still always look at the Dow futures for whatever reason, just to kind of get an idea, with the market. We have 250, 300, 400 point days now, and I just it's just a mental thing, But hey, man, so I guess we'll go ahead and close it out. I want to thank you again, and I hope we can't tell anybody where you live and all that and everything because of the government work that you do and all. And no, it's not the IRS.
It says it right there. I'm in Washington, D.C.
Oh, man. But where in Washington, D.C.?
Well, yeah, it's a pretty big city.
Pretty much. A lot of them people running around in that thing. But for a country boy like you, I think you're doing pretty damn good. So...
Yeah, I don't mind these city people.
All right, man. Take care, Chris. Thanks again, man. Hey, good luck. Good job today on the Ultimate Trader Showdown as well.
Oh yeah,
Yeah.
yeah. You know what? I mean, if you want to do another one, just let me know.
Well, you're a
I just
winner.
need,
You're a winner, so you will go
yeah,
up against somebody else before it's over with. You
yeah,
know.
yeah. Just let me know in advance so I can make arrangements. Because I mean, with my full time work, I just need to make arrangements. And shoot, we can do it again.
Yeah.
I enjoyed it.
Roller coaster. You said it says change 725 on the ES. What are you saying? I don't know what you're talking about. I was just talking about that. That we we're riding along here. After hours here, kind of tight range here, around this 36, 37 level, and we had popped all the way up to here. I'm not saying from where we're at right now, but we ran all the way up to here at one point. So that range is nice solid range there. So there's some
Yeah.
action going on. So all right, man. I'll see you.
Hey, yeah, no problem. And I mean, people will get that custom indicator. I mean, we'll get it out to you
Well,
guys. I mean, don't worry about it.
yeah, we'll have it. Chris, just email it to me or something. I'll stick it up on the server and start
Yeah.
giving it to people.
All right.
All right, man.
I'll talk to you later.
Thank you, buddy.
All right, later.
All right, so that was a good one. Liked it, loved it. Always good to have him on. And yeah, it's a couple hours. We punch in a couple hours for you guys, and I mean, some of these things run 3 and 4 and 5 hours, but we wanted to try to, get him back in the swing of things with doing shows with us and stuff. And he's done a couple, but we wanted to do it again. And I mean, I'll be totally honest with you guys. I'm a little bit, intimidated, by the options and stuff, and I'm not quite ready to try them myself. But they're fascinating. I can definitely see the advantages. Limited risk, and if you get your setups right and everything, you can make a lot of profit with the amount of money that you're putting in there. So, you guys are crazy. You guys in the chat room crack me up. And man, so anyways, for those listening and going, what's this show all about and everything? It's about day trading radio. It's about DayTraderRadio.com, and it's about the education, the shared knowledge from the members in the room. The chat room is specifically what we talk about all the time, and it's just a great place to be part of, and I'm fortunate. So DayTradingRadio.com. If you're not a member yet, come on over to DayTradingRadio.com and try out a 2-week free trial. And again, if you're listening and watching this show, and it's not November 10th, 2011. Then you're watching an archive, so you missed it live, but hope you enjoyed the archive, and of course everyone that's watching live right now, hope you enjoyed it as well. So with that, I'm RPM, Trader Spotlight Live, DayTradingRadio.com. I'll see you guys on the other side, and take care everybody, and good luck in the markets.